Hello everyone. This presentation is on the 2016 FDI report as it relates to global greenfield investment trends. We have all now done research and work related to foreign direct investment, so this presentation will focus on the inward and outward flows of FDI from a global perspective and also a regional perspective. Greenfield investment has the most tangible impact on economic development and is the most solid indicator of a country's competitiveness. It is less volatile than mergers and acquisitions and other types of foreign investment. On a global overview, Greenfield FDI shows signs of improvement with capital investment increasing by nearly 9% to $713 billion, while job creation increased by 1% to 1.89 million. The only downside was that the number of FDI projects declined 7% to 11,930. India replaced China as the top destination for FDI by capital investment following a year of high-value project announcements, specifically in the coal, oil, and natural gas and renewable energy sectors. Global FDI flows grew substantially in 2015 by more than one-third due to record levels of mergers and acquisitions. On the other hand, greenfield FDI projects grew less than 1% from 2014 to 2015. Global business executives plan to continue to invest more internationally. This signals that 2015 may be the start of a new trend in FDI growth, even as other measures of globalization languish. Investors headquartered in the Asian Pacific region are more interested to increase FDI than their European and American counterparts, with 74% planning to boost investments. Among firms that plan to increase FDI, the most commonly cited reason is the availability of attractive targets, which perhaps have flourished because of the lower relative volume of FDI in recent years that have created a backlog of high-quality direct investment targets. The somewhat improved macroeconomic environment may also be encouraging firms to spend their retained profits on new investments abroad. And while the dramatic appreciation of the U.S. dollar has made investing in the United States more expensive, the corresponding depreciation in the euro and many emerging market currencies make firms in those markets more attractive. Another factor that may be contributing to the firm's plans to increase FDI in the coming years is the belief that FDI will become more important for corporate profitability and competitiveness in the next few years. Once a firm decides that engaging in FDI is in its best interests, executives must also decide where to invest. Other critical factors include the cost of labor and the transparency of the regulatory environment. FDI into Asia Pacific by project numbers totaled 3,883 in 2015, which is a 7% decrease from 2014. China was the top destination for projects in 2015 with 789, although it was a 16% decrease from the prior year, which resulted in capital investment decreasing by 23% to $56.6 billion. India replaced China as leading recipient of capital investment in Asia Pacific with announced FDI of $63 billion, along with the 8% increase in project numbers to 697. The top three countries for capital investment were India, China, and Indonesia, which accounted for 49% of FDI in the region. Although Japan isn't a top destination for FDI into Asia Pacific, the country is a top destination for FDI out of the region with total projects of 853, which accounts for $53.5 billion in capital investments, which is good for the second spot behind China for capital investments. Going on to Europe, FDI into Europe by project numbers totaled 4,049 in 2015 with capital investment of $156.5 billion. FDI out of Europe by project numbers totaled 5,414 in 2015, with capital investment of $258.5 billion. Companies from UK, Germany, and France collectively account for more than 50% of FDI projects from the region, although both Germany and France saw a decrease in project numbers from prior year by negative 54% and negative 1% respectively. FDI into Europe for 2015 was dominated by UK with $53.3 billion in capital investments, which accounted for 34% of the market share. FDI into North America increased in 2015 by nearly 10%, with total inward capital investment of $68.8 billion, while project numbers declined by 6% to 1,754 FDI projects. FDI out of North America totaled $127.2 billion in 2015, with project numbers reaching 2,944. FDI into Latin America and Caribbean by capital investment dropped in 2015 to $70.2 billion with 13% fewer projects. The number of jobs created by FDI in the region increased, however, by 4% to approximately 237,000. Top 3 destination countries for FDI by capital investment in the region were Mexico, Brazil, and Chile, which attracted $24.3 billion, $17.3 billion, and $9.7 billion respectively. These 3 countries account for 74% of the total market share for capital investment and 69% of the total market share for FDI projects in 2015. Moving on to the Middle East and Africa, FDI was stagnant in regards of project numbers from 2014 to 2015. Total projects for 2015 equaled 1,254, with United Arab Emirates retaining the top destination by project numbers, accounting for 24%, although this was a 2% decrease from prior year. Every country in the top 10 saw an increase in project numbers for 2015, other than Kenya, which saw a 47% increase. Market share in regards to capital investment for 2015 is evenly dispersed, with Egypt having the greatest market share at 15%. On a global scale, a sector analysis was performed to see the key trends in 2015. Total number of FDI projects in all sectors equaled 11,930, which reflected a 7% decrease from 2014. The top 3 sectors by project numbers include software and IT services, business services, and financial services. These 3 sectors account for more than 1/3 of FDI globally by project numbers. Within the top 5 sectors by project numbers, business services was the only sector to witness growth, with 1,413 projects recorded in 2015. Financial services experiences one of the biggest declines, with project numbers falling 29%. Coal, oil, and natural gas reclaimed the top spot for FDI by capital investment globally, with $113.5 billion, which equated to 16% of the market share of FDI recorded in 2015.